Well, we have some major news in for all investors that have been very nervous over the weekend. Just seconds ago, the stock market closed, and so many investors are breathing a huge sigh of relief today, at least for now, because it could have been much worse. For much of the day, all three indices were trading in positive territory after starting in red territory. The market just closing. The Dow was down 96 points, which all things considered isn't awful. The NASDAQ finished up 45 points, and the S&P just barely in negative territory. All of this and a lot of focus on it because of the collapse of the Silicon Valley Bank. That led to many fears from folks who were worried that more would follow. But the indices, again, responding for the most part as well as we could hope today. They were in some slides early but pulled out of them.
Yeah, and today all customers of SVB should have access to their money. Federal regulators took over on Friday, and the tipping point came last week when the bank said it sold about $21 billion worth of its securities at a nearly $2 billion loss. It also needed to raise more than $2 billion to meet clients' withdrawal demands.
Of course, this scared customers at Signature Bank in New York, among others, causing them to withdraw $10 billion worth of deposits. Federal regulators now control that bank as well. So what does all this mean? Well, our Carmen Blackwell is here now with us on set of What's New to try to sort it out. It gets confusing, Carmen, but the big news is I think the bullet that everyone feared today was dodged, at least for now.
At least for now. I mean, I think that that's the sentiment of what we're going towards here. For now, we're going to be okay. So Silicon Valley Bank, the 16th largest bank in the U.S., is now the biggest American bank to fail. And this is since the 2008 financial crisis, the recession. The Treasury, Federal Reserve, and the FDIC will protect bank deposits following a number of issues at Silicon Valley Bank and Signature Bank, as well as Jay just mentioned. So what does the bank's collapse mean for banks here in Northeast Ohio? Well, just moments ago, I spoke with Greg Harmon. He's a banking and finance professor at Case Western Reserve University. And I asked him for his input on how the fallout might impact us here locally.
Maybe we have a bank account with one of the local regional banks here, and we get 1% or 1.5%. But short-term treasury issues, so treasury bills guaranteed by the government, are yielding 4.5% to 5%. So there's a big disconnect between where you can invest your money and what your banks are paying you. For the regional counterparties that are in the Cleveland area, they're going to have to prove to us, they're going to have to prove to market participants that they have got prudent risk management, and not just to market participants, but to the Federal Reserve and the.
Well, you heard him there. They're going to have to prove to us that we can, of course, trust them. So I reached out to Key Bank today for comment, and their regional office responded with this statement that reads in part, quote, "Despite the recent events in our industry, Key Bank is well positioned to continue supporting all of our clients with a full range of financing options while maintaining our moderate risk profile and delivering value to our shareholders." Now, as for the long-term local impacts here in Northeast Ohio with the banking crisis, Harmon also tells me that it's yet to be determined in terms of you getting access to your deposits. Everyone, for now, Jay,
yes,
we're safe.
Whew.
Yeah,
I know. That's good.
It's one of those things, though, you kind of go, uh-oh.
I know.
Especially those who have, been through 2008, and you kind of saw all the little pieces starting to click into place again, and it does make you a little bit nervous. So
we're going to be okay for now.
All right.
Okay, we'll watch.
Crisis averted. Thank you, Carmen.
You're welcome.